What's going on, guys? It's Tony with Success's Imminent Coaching and Trading. We're going to go through a breakdown of some of the instruments and tickers that you guys have been asking for and you have questions about, and just to give you guys an insight on what I think. So let's get into it. There it is. Okay. So already I have ES open and NQ. ES and NQ, if you don't know, are basket instruments that are, like I said, a basket of U.S. companies. So however U.S. companies are doing is what this is tracking. So if they're doing good, this is going to go up. If they're doing bad, this is going to go down. And ES and NQ track different sectors of U.S. companies. Some of them overlap, but yeah, so I think NASDAQ is tech, ES is like top 500 or something. There's other ones like Dow Jones. Dow Jones is, I forget what it is. Russell, I forget what it is as well. I think it's like medical or something, but I mostly focus on NQ and ES, but there are trades with Dow Jones and Russell, and I have traded them before. I just don't really pay attention to them that often, but they all correlate. So these four correlate, and it's good to check between them just to see, you know, which ones are going down and which ones are going up. And I say that because if you have something like a distribution and you're expecting seller strength, then you can check between these four and say, okay, well, ES has broken all-time highs and it actually looks like it's reaccumulating, but NQ looks like it's redistributing. As you can see here, it's going lower highs, lower lows, right? So yeah, then if it's one-on-one like that, then I can check Dow Jones. Dow Jones is kind of going sideways, but more so downwards, right? And then Russell, is it the same thing? Not really, but at the very least, Russell isn't like breaking all-time highs like ES is. So ES is the only one that's breaking all-time highs right now, in that way or manner, and the rest are sort of either stagnating, curving down, or sellers are actually participating. So that's a good way to go about these things. I firstly usually focus on NASDAQ because I like to trade NASDAQ just due to the volatility and the volume on it compared to Russell, Dow Jones, and ES. But again, you can trade any of those four as long as the trading criteria presents itself. But so the thing is, right, we're not trading patterns. Remember, we're trading at reasons, actual reasons. And I'm going to, sometimes I say that and I don't really dive into it, but basically we need to see more than just some sort of, level and drives. We need to see actual volume and commitment between buyers and sellers, right? So if I see something like this with NASDAQ and I'm bearish on US indices right now, right? If I'm bearish and I want a distribution, I need to see, even if NASDAQ breaks all-time highs, I need to see lack of commitment from buyers and for this to kind of roll over and die and come back into range. Then I need to see commitment from buyers to break the low, and I need to see if it does come back up to mitigate. I need to see it very reluctantly coming back up. If it comes back up very strong, like large movements and candles, I have to be very careful and make sure that I hit my criteria of watching for my micro schematic, so I can confirm once again, sellers or buyers are in control. Because if I get the micro schematic that there are sellers with the manipulation and then again commitment with sellers, then I can be more confident in that. But if I don't get that and instead we get something like this where it dies, it breaks through, and yeah, we get that good, but then it has a ton of strength and it breaks that high, or it has a ton of strength all the way through coming up to this 0.5 and this 0.23, I have to be very careful not to just jump into that trade. And that's our job as traders, especially the way that I teach you guys as a Wyckoff filtering trader. You have to be kind of like a sniper. we're not going into battle every day to make money. We're sitting and laying and waiting for our perfect time. A lot of the times when we get into trading, or new people get into trading, we have this idea of making money every single day out of clicking buttons. And although, partly that is true, most of the time, at least for me, what made me successful in trading is waiting. And that's not going to look like taking a trade every day. That's going to look like taking one trade a week at most, one trade a month even. But the thing is, our risk to reward with those trades is so high that, if I do take that trade, I'll have something like a 1 to 10, and I'll be able to get $2,000 or $3,000 on that trade, and 1 or 2 trades a month that way is more than enough. And if you're scaling up, even more so, right? Of course, you're going to have losers as well, but the reason we have such a high risk to reward ratio is, we're only risking $300 a trade or $200 a trade. Again, obviously the scaling matters there, but you get what I'm saying. We're risking a lot less to make a lot more, and by the end of the year, you've made 50,000, 60,000, and obviously that matters if you scale, or that changes if you how you're scaling your sizing. So yeah, a lot of money is possible, but it's not this dream where you're taking a trade every day and making money and you never lose. You have to consider your losers, and you have to track your winners and why you're winning, and you have to be consistent with the way you're entering. So of course that's going to be a little bit hard when you have a discretionary trading style. We do have a sort of discretionary trading style, but it's a lot more consistent than like ICT or SMC or something like that. Whatever you guys are trading, or you guys have, those traders don't make money unless they have a really specific edge. And it's literally because of what I'm talking about right now, is that discretion. The more discretion you have, human discretion, the worse you're going to perform in the markets. If your ICT style is, I only take trades in the morning on Wednesday and Thursday, and only if I see very large movements and commitment to one side, so because obviously New York session trends often, right? So if you do that, then yes, you can be successful with ICT. But with what a lot of these people are teaching you with ICT concepts, it doesn't work. You can't one day trade off of a fair value gap and then another day trade off of a failed fair value gap in an ICT reversal or something like that. If you have like 4 or 5 different entries and you're not taking into account the political and economic status of your instrument, and you are just your risk to reward ratio is off, and you're not risking a certain amount per trade, and you are, I don't know what else might make ICT traders lose, but if you don't know how to trade off of like choppy daily movement, for us it doesn't really matter that much if the day chops, because we trade off of schematics and confirmed reversals. We don't really care that much that today, this morning is chopping longer than usual, and stuff like that. It doesn't really matter to us, but you get what I'm saying. A lot of ICT isn't consistent, and so of course you're not going to have a consistent result. But with our Wyckoff trading, sure, we have some sort of differences in our entries, but for the most part it's all consistent. We consistently we are checking and making sure that sellers are present or buyers are present and levels are being respected, and our narrative with economic and political situations all align. So all right, that's enough of that. But basically what I see is inflation is not doing too bad. The labor market's not doing too bad either. Unemployment is not doing that bad. We have to see with what the Feds want to do with rate cuts. And I'm still bearish on U.S. indices, but I'm open to the possibility of going for all-time highs and continuing upwards. But like we just saw, 3 out of the 4 correlating tickers are kind of going bearish and showing a lack of commitment with buyers. Again, that doesn't mean that I'm going to just jump in and commit yet, but it's something to think about. I'm building a case. As a trader, it's basically like being a lawyer. You're building a case for every single one of your trades, and if you can't convince yourself that what your side is right based off of real factors and real facts, then what are you really doing? You're just gambling. So as far as what I can tell with NASDAQ, we did break all-time highs. Let me turn off volume real quick because it's kind of messy. But yeah, broke all-time highs. We're still reaccumulating. Our last 2 reaccumulations, as far as what I can tell on the 4-hour chart, is this. It looks like it's already been mitigated after this break to the high. Looks like it went down to 0.5 to 0.8 over here. This might still need to be mitigated. Maybe. If it does break down, I'll be less likely to respect. I won't be too worried about these levels because it looks like it's already pretty much mitigated, absorbed, and balanced before it started to run back up. But it's still something I'll take into account. Obviously, we have this huge reaccumulation on the weekly chart, or I guess on this hourly chart, but you get what I'm saying. The size is different. And of course that matters with us. Our schematic sizes really do matter. If this took half a year, which is what I'm assuming it did, then if something else is going to form out, I'm going to expect for it to be around the same time frame, about half a year or so. Of course, the larger time frame that it goes, the harder it is going to be to predict and be consistent with the size of these schematics. But like back here in 2025, early 2025, how long did that take? About half a year again, half a year and half a year. See how it kind of sticks to the same sizing. Like over here, it's a little shorter. I mean, if you count that, not really, but 140 days at the least, So yeah, that sizing matters, and that's why I tell you guys to keep in mind the size of your schematics when you're zooming down to low time frames, because you don't want to get confused or get tricked into thinking the schematic's over, but it hasn't met the time frame that it should be meeting. Of course, sometimes schematics end early, but usually on a consistent basis, they keep the same amount of time and power. Okay, but yeah, so down here is 0.5, 0.8. I have my fib backwards by accident, but you get it. 0.5 is down here, and 0.8. And obviously, like down here, it doesn't always come back down to mitigate. It might die down a little bit, but it might just come back up. So I'm not always specifically targeting down to these levels, and because it can be evasive, it can be what's the word for it? Elusive, to catch these exact entries or exits with assets that are kind of always in demand. Not that U.S. indices is always in demand, but for the most part, when economic and political situations move, it's not exactly always balanced out. Like it's not even. Otherwise, the chart would just be sideways. It's got to rise somehow, and just like gold is always in demand for a reason. It's used in electronics. It's used for jewelry. People use it as a way to store their wealth safely. So it's always going to be in some kind of demand. Same thing with U.S. indices. Companies, the U.S. wants the U.S. to do good, and they're always going to try to make it better. So yeah, if it does come down, it's not always going to hit these perfect demand zones. But if we do get distribution, distribution with the manipulation, take that short and, mitigate our loss, and we aim for that, that's fine. We just gotta, keep in mind that when we get that accumulation, then we should probably start to, make sure that we're either, if you really want to be like out there, I guess you could do nothing and break even, but sometimes honestly it's best to just pay yourself. Up to you, but some people like to hold it, and as it kind of dies down and comes back down, obviously that's a redistribution, and then it comes to that 0.5 or wherever you're trying to target. You try to get the most out of your trade, and that's fine, because like 1 to 6, 1 to 10, that's great. And a lot of the times, especially when we hit these sniper entries, as the economic situation turns and as we get that top or bottom distribution or accumulation, we can hit trades like 1 to 20, 1 to 30, 1 to 60. Has been possible before, especially with second schematics, the schematics in the seconds time frame. So here, right, I'm currently still bearish on US indices. Like I said before, I'm gonna wait to see. I want a distribution somewhere with the manipulation to the upside. Now I can have some kind of downward movement like this, and I can have that break to the upside, but I do want to see, like, I do kind of want to see it die. If I'm gonna take shorts here, I need to see something, maybe like a micro at that UTAD, because this would be like buyer's climax to automatic reaction, second test, and then if we get that UTAD, I want to see something of sellers stepping in and committing, and buyers stepping out and falling, because again, we're not trading those patterns, we're trading the actual reasons as to why and how. And that when we do something like that, we need to check volume, we need to check strength of the candles. So it's not all about patterns, and we also need to check the economic and political data, PPI, core CPI, CPI, unemployment. Give us more reasons as for it to give us sellers to jump in. And until then, I'm going to be more cautious. Now, what can I see happening is we come back down to, maybe this 0.5 or this 0.8. Now, of course, I said it's already absorbed and mitigated, but it's still possible that it hasn't really balanced itself out, and we can find our way back down here before coming back up. Now, that's something I see very possible, especially with ES. If I watch ES and I see something like this, UTAD break this low, mitigate, die again, give me a micro like this, and take that trade, that would be like a perfect trade for me, especially with this distribution on the high time frame. 1, 2, 3, UTAD. Like I said again, 1, 2, 3 manipulation, confirming seller strength. Even on different, confirming seller strength on different time frames. It just confirms my idea that sellers are stepping in. Sellers are in control here with the distribution. Sellers are in control here with the micro distribution, with the manipulation. If we were to come back up, buyers should have stepped in here and rallied, but they haven't. If it comes back down, I can consider this a UTAD. I have my 3-4 drives. I can take that trade on the UTAD and aim for, all the way down here. Let me see. I can aim for that like amazing 1 to 20, 1 to 16, 1 to 15. I mean, like if I take a trade here on that UTAD, get a little stop in, aim for like a there, like that's 1 to 5. If I zoom in and I see something like actually, sometimes your risk isn't even that much. You can see how the ratio really plays out when you have such a big amount of room and aiming for these extreme demand zones, how even if you have like a 60% win rate, even if you have a 50% win rate, you can see how this will make you money. And the good thing is, at least for me and what my journal tells me, I have an over 85% win rate. You know, it kind of ranges, but even this month, 95%. You know, maybe next month it'll go down to like 80%. Maybe the month after that it'll come back up 87%. You know, your win rate will have a fluctuation, but how big is that fluctuation? Does it ever go below 80%? Does it ever go, you get what I'm saying. Even if it fluctuates between like 95 to 85%, that 10% fluctuation still tells you that you never really go below like 80% win rate. You know what I mean? Or 85% win rate. And numbers are factual. Numbers, it's hard numbers. It's not opinion. Nothing can tell you otherwise. That means it's a fact. It will happen in this way. And if you ever do, if that fluctuation ever does go below 80% or 85%, you have to ask yourself and go back to your journal, review all the trades that you're taking and say, what is making me lose so much? And go back and review those losses and say, what have I been journaling and what haven't I been journaling? What are the details that I'm missing that I should be adding to my journal? So U.S. indices bearish as long as we keep on looking at the data for inflation, and especially incoming this week, what they're going to talk about rates, the Feds, what they're going to do. I will see if we're going to go for more bearish or if we're actually going to go for all-time highs, and I can be a little bit more aggressive with following the all-time high rally. Because one of my rules is that when it does break all-time highs, I like to continue until it says no. I like to follow the wave up, because I notice that people like to rally when it breaks all-time highs. For example, here, follow the way up until it says no, and it'll eventually say no, and then I'll be more careful. But that's a good time, for at least from my experience, to follow the trend and keep on going. Now it's a little more complicated, especially because I'm a little bit more bearish on U.S. indices, but that's why I told you guys, I'll see, and maybe we can be more aggressive and follow the trend up. So that's my breakdown on U.S. indices. If you have questions, let me know. I'm going to move on to gold. Gold, I'm not really too I don't have my eyes set on gold that much. I'm kind of ignoring it, waiting for it to rebalance. It kind of did already rebalance. It came down into demand, hit a 0.5 to 0.8. Instant demand spike. People are buying it. But I'm kind of waiting to see if it's going to, dead cat bounce, meaning, the price of buyers stepping in is just going to die out, and it's going to slowly curve over and turn into sellers. And in that case, maybe I'll see a distribution, maybe a manipulation, hopefully, but, I don't really know if there's going to be enough power to get a manipulation in there. But this is gold. Keep in mind what I said about gold before. Electronics use it, jewelry uses it, it's almost always in demand. It's very hard to get gold in a prime demand spot, because it always rises. It's always in demand in some way or form. So when you trade gold, you want it the way that we trade, we want it to come back down into a premium or a discount zone, so we can get that sniper entry, get that nice risk reward, and making sure that we position ourselves in the smartest way possible. But with gold, it's a lot more difficult. And I trade gold, but I don't always trade gold, and I kind of most of the time stay away from it. I will sometimes follow the way up, but I usually like to see commitment with the buyers. So even though this looks like it's kind of dying out, like I said, shorting gold is not always the smartest idea. If I do short it, I'll be very careful with my risk management. And as soon as I get the chance, I'll probably break even. So I'll take a partial and break even as soon as I get the chance if we get that distribution with the manipulation. If we don't get the manipulation, I'm not trading it. That's just my opinion. Some people will, with Wyckoff, they will trade it even if it doesn't have the manipulation, because they see that lack of commitment from buyers. But in my opinion, I mean, that can turn into manipulation to the downside instead, and we get stopped out. And like I said before in many of my videos, if you don't recognize or identify the manipulation, you are going to be the one that's manipulated, and you're going to lose your money. So if I don't get that manipulation, I'm not trading it. But what I will do is, if it dies and breaks down, if I see an manipulation, I'll trade that. If I see an accumulation without the manipulation, I kind of drew with it. If I see it without the manipulation, I'll try to trade like a reaccumulation or something like that. And the difference here is obviously because gold is almost always in demand, and so I'm not going to sit there and be too worried if I don't get the manipulation. Of course, I know it's possible. There's always that possibility that we'll lose out if we trade without seeing that manipulation. Like I said, can't identify the manipulation, you are going to be manipulated maybe. But yeah, so that's my take on gold so far. And I don't see it having enough power to reach this demand zone up here and this redistribution. I mean, this supply zone. So, but if it does hit that 0.5 and that 0.23, that'd be pretty cool. If I find some sort of distribution with a manipulation there too, I definitely take that. But again, it's gold, So that's my idea with gold. For the dollar, dollar is, for the past like year or two, it's been in this super big accumulation. If you guys don't see what I'm talking about, I'll just, I guess that's like preliminary support. But that's one drive, that's two drives, maybe that's a third drive, but that's a fourth drive or third drive, and maybe a manipulation, even a spring to the last point of resistance. If that breaks that high, definitely gonna see this this demand zone right here to this 0.5 and that 0.8 down here. For now, what I want to do is, if I do zoom in, that's going to take a long time. Obviously, that's a larger time frame. But with the US dollar, if I zoom in and I see, like I do here, accumulation with 3 drives, that's a spring. We see the LPS, the break of the high. Now we have a little micro accumulation with the manipulation. There's a 0.5 right here and a 0.8. I would definitely be open to taking that trade if it reaches down there, and I'm fine with taking this trade up. Take some sort of trade like this and aim for maybe like that high up here or something. But that could be like a 1 to 12 trade that we're looking at so far. That's possible, but it might not reach down to these demand zones. The dollar economically, if I think about it, it will depend on whether or not US indices is going to go down or up. And what I mean by that is, if inflation comes up, if inflation and unemployment comes up, and people are going to be spending more money on bonds for bond yields, then I can see the dollar starting to pick up. But if US indices is doing well, I can see it coming down to this demand zone. And then maybe it's going to play out pretty well in that way, where the dollar will fall as U.S. indices is rising for the short term. Then all of a sudden we see inflation pick up and Feds start to delay cut rates or say no to cut rates. And then, we can get that accumulation here and we can take that trade somewhere along the way, get a 1 to 10 to 1 to 20. And that would be a really good trade right there. So that's my breakdown of the dollar. I'm not really going to look to short the dollar, honestly. If I do short the dollar, I have to be very aware that, buyers have given us like 3 different time frames that they're showing up, so I would have to be very, very managed with that trade if I do take that. Now, Bitcoin, you guys know my plan on Bitcoin. I talk about it all the time. I'm just going to, 5-minute breakdown. Not even going to talk about the schematics or anything, but basically supply zone up here. If that reaches up there, perfect. Maybe you can short it, or it might not have the strength to come up there. I might even take a short right here if it gives me a good distribution with the manipulation. I'm always going to look for the manipulation. I'm not trading this without a manipulation. Bitcoin is heavily manipulated, and they know what they're doing. You guys know that this is all planned. They are consistently taking trades on either side. Large, big players are putting money in, and then some news happens or something happens that goes in their favor. And they know this. They're doing it. It's planned. They know what they're doing. The first thing I tell you guys when you guys first started learning under me is that we are looking to follow the big players and institutions that are trading billions of dollars. They don't care about our little $100,000, $200,000, $500,000 account. They don't care about that. Even if you had $1 million, they wouldn't care. They don't care about retail traders that much. They are going to manipulate them out, but mostly they're playing against each other. But anyways, right? Bitcoin, it's going to come up. If it does, I'm going to be looking for a short here. If it doesn't, and it doesn't have enough strength, I'm going to be looking for a short here, but I will need that manipulation. I want it to reach $40,000 or so. That's going to be, if it really hits like $30,000, $20,000, that is, I don't even have to work another day in my life if it hits that. You know what I mean? Like, that is going to be the golden ticket to generational wealth. And I've been telling you guys that for the past year. Just wait for Bitcoin to come down to this price range, and take that accumulation and trade it all the way up. At that point, I don't know if it will reach $20,000 to $30,000, but I can hardly see that ever happening, because so many things have turned to Bitcoin. So many people have turned to Bitcoin. The world has put their attention on Bitcoin, so I don't really see it definitely coming to 20, 30,000, but it's not impossible. People who are buying right now are too early. That's just my opinion, but I could be wrong. Again, like I said, this is, as traders, we're like lawyers, and we can be wrong. Our win rate is a testimony to the fact that we can be wrong, even if we are right 85% of the time. So Bitcoin has a halving event every like 4 years. The supply gets very heavy every 4 years because it gets harder to get Bitcoin. And basically, because that happens, I'm very bearish on Bitcoin until we get more balance, and I don't think 60 to 70K is enough balance. I need to see it drop, for this next, I believe the next like half of this year, maybe the end of this year, it'll start to pick up, or maybe early next year it'll start to pick up. But I expect it to be bearish until then. and I need it to hit one of these demand zones. I could see it hitting $40,000 to $50,000, and that's my golden zone. I want to wait for that accumulation with the manipulation, take my trade. Honestly, at that point, it's not gonna get below 15,000. That's for sure. No, nothing is gonna go below 20, 15,000. But I can see it going to 20 to 30,000 maybe as a possibility. But again, I'll wait for my accumulation with the manipulation, confirm that buyers are stepping in, take that trade in. For now, I'll wait and see if maybe I can short it down to the 40, 50,000 range. Oil, I've already kind of lost my what's the word for it? I've lost my interest in oil, kind of, but it's still something you can trade. The only thing is, right, we've already kind of mitigated our prime zones in a way. Like if I hide all this, we can see that, as the Iran and Strait of Hormuz war kind of took place, we went up to like $120 a barrel, instant mitigation to like $70, balanced out. But as Trump is going back and forth, Strait of Hormuz is open, Strait of Hormuz is closed. We destroyed Iran. Iran is still alive and doing things. Iran's gonna open up the Strait of Hormuz. They don't have much longer. Turns out Iran had much longer. As it goes back and forth like this, and it's all intentional, by the way. Obviously, we had all this, balancing going on. And so I'm not so keen to trade during all this volatility. Unless, if I had caught it when we were in some sort of prime demand or premium zone. Like if it comes up to like $120 a barrel and all of a sudden we get news that Strait of Hormuz is open, Iran is the war is over, this and that, then yeah, I could see like distribution. I'll trade that distribution down, short it down to like $80, $70 a barrel. If it comes down to $70, $80 a barrel like here, and gives us that accumulation, and the Strait of Hormuz is still having an issue and whatnot, yeah, I could see that also take it long there. As of right now, we're in this kind of like redistro. We're in the premium, and we're pretty much hitting that premium supply zone, above the 0.5. So yeah, I mean, if it does this, and I see manipulation, I see the short mitigation, then I'll take that trade. If it does something like this, by the way, guys, if it breaks and it doesn't come back up to mitigate, but instead it gives like a redistro, I'll take that trade too. That's fine. It's just I'll manage it a lot closer in case that it wants to come back up, hit that 0.5, then come back down, because that's possible. So if I do take a trade, like a LPS trade like that, then I'll make sure to break even as soon as I can. Maybe after it hits like a low or something, take a profit, break even, and that's how I would play that. But yeah, that's my like short breakdown on oil. Not too interested in it, but if you like zoom out, you can see that our demand zone is this 0.5 and this 0.8 over here on this accumulation. It's not really a valid accumulation, and I'm pretty sure this is a glitch. Obviously, it's not going to be minus $40 a barrel, but that's going to be like kind of like the unofficial accumulation, and then it broke through. So I'm going to treat this as a demand zone since it's a weekly time frame. And then this would be our distribution. Redistro might be coming, but yeah, I don't have that big of a supply zone because we don't have a valid schematic up here besides this. But around 120 or 100 to $140 a barrel is premium, pretty much, and demand is obviously down here, $40 a barrel or so. But if I'm looking at this as the accumulation, you know, like 1, 2, 3 drives, spring into the break, and I look at this 0.5 and 0.8, yeah, this could be a good demand zone around $60 to $70 a barrel to trade from. Yeah, that so far that's the plan with oil. Of course, we have to be careful with how the news is going, but if I zoom out, that's the zones and schematics that I'm looking at, and I have to be wary of. And let's see what else. That's just about it. I didn't really get anything else from you guys. I got like some forex pairs, but I don't want to. You have to really deep dive into like economic states of separate countries and their currency to see how it's gonna go. But I'll do a separate video on forex for you guys later on. I think you guys asked for British pounds, but I'm not too interested in British pounds right now. If it, you know, hits something like if U.S. indices does well, and or if dollar does bad, I'll be more likely to long British pounds futures. And you know, we are in that very big accumulation on the weekly chart, and we do have the manipulation to the downside. You can see 1, 2, 3 drives, manipulation. Now we're trying to build that strength and break out to the upside, you know. And so obviously the weekly chart's going to take a lifetime to get that, but you know, we don't have to go too far down, or we don't have to wait that long. We can try to take these trades, but we got to wait for these demand zones. Either that, or we need to see some real strength and committed buyers to take that trade up. And I guess committed buyers in this case would look like, I guess, break to the upside into like a reaccumulation with the manipulation mitigation. Then I'll take that trade. Either that, or I want it to manipulate the lows, give me the accumulation, and I'll take that trade. But again, only if dollar's doing bad. If dollar's doing bad, I will trade British pounds. Otherwise, you would have to be very close, or you'd have to be very in tune with how the British economy is doing when you're trading it, to see if you still want to take a long. Because just because it comes down here and gives you the accumulation with the manipulation doesn't mean you should take that trade. You still need to think about the economic reasons as to why buyers will step in. If there is no reason for a buyer to step in, you're trading something that might be the manipulation to the downside as a redistro. Alrighty, guys. Thank you guys for watching. Tony with Success's Imminent Coaching and Trading. Sorry this review took so long. Again, if you have questions, let me know. And if you need a call, or you need one-on-one help, let me know as well. I'm gonna open back up the students and trading in a second, probably this week or next week. I'm not busy anymore, so we're gonna get to it. And yeah, let's make some money, guys. Keep in mind Bitcoin, keep in mind US indices. That's the main focus. Gold, dollar and oil are, kind of on the off side, but you can still pay attention to them. I will, but I'll be less active until I see something really playing out. Have a good one.